Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 14 years. We're going to check in on the broader market. Another Friday bounce attempt. This one's a little bit more convincing than the prior one. We'll talk about what the bulls need to continue to do to prove we have a fear bottom set and we can follow through with some upside. So we're going to talk about the major sectors. Tesla, quantum stocks had a really strong end of the week. Miners, the metal miners. Before we get to it, just a reminder, go to our website, chartguys.com, click on resources, and you can spend weeks on this website in terms of free resources and things to go through. The trading educational roadmap lays things out, but you've also got trader Q&A, things like that, with just hundreds of questions and answers. And of course, we have the paid access to our community. Check it out. All right, so we're going to start on weekly charts and zoom in from there. And we have a key resistance test first thing this coming week. So we have a lower wick on the weekly candle. The bulls are obviously attempting to get their bounce going. And what matters most to me is the 4-hour chart for clarity. Look at this base on NQ. So the NASDAQ had our low, and then we held it, and then we held it again. And so it's a base of support. Okay, now we got the bounce on Friday, and now we're testing a wall of resistance. Look at all these tops. We topped out on Tuesday. And then we topped out Wednesday and Thursday at this zone as well. And so here we are at the end of Friday, testing the zone and not breaking it yet. So this is going to dictate how we start this coming week, Sunday night into Monday morning. If we reject again and cannot get over this level, we're going to come right back and trade within this sideways range a bit further. And yes, another leg down would absolutely be on the table. Just keep in mind that whenever you get a bounce like the one we've seen, RSI levels cool off. We are no longer oversold on any time frame. The daily is no longer oversold. So I have to see, again, we just like our check marks, right? So check mark for bulls, play defense. Okay, the bulls have played defense. Can they go on offense? The only way they're going to go on offense and convince bears to cover short positions or go long is by getting over this wall and turning that into support. If they pull that off, we'll zoom out and we'll look at the daily chart from there, but I'm on the 4-hour until we get some clarity around that resistance zone. So it's almost like, yes, bulls can be positioning, aggressive bulls off of the lows, but still got to be cautious of this just in case we reject again. ES, the S&P 500, again, weekly lower wick. The 4-hour EMA 12 was a great guide. Look at all these rejections. My mindset was, I'm not bullish if we're rejecting from 4-hour EMA 12. We rejected. It's pretty much been a week and a half of straight rejections, and we're now over it. So that we could say this is the first time in a week and a half that the bulls have given us a meaningful bounce. The difference with the NASDAQ and the S&P 500 is we did drop to a lower low, granted with no follow through, but just a bit slightly weaker. And we also have this resistance zone here as well. It's more clear for me on the NASDAQ, so I care more about it there. But again, that's where we topped out last Tuesday, topped out Wednesday, and we're right at that level as we head into the start of next week. The semis are showing relative strength, and you could see that with their candle, big bullish weekly candle, and there was relative strength where, we had the bounce underway, and the NASDAQ hit that low and held it, but that was on Thursday. We hit that low, and semiconductors on Thursday didn't get close to the low. So that's where the relative strength starts to become a bit more glaring. And we would have had to have dropped another 3.5% to hit lower lows. And so positioned well. That's whenever I see that, I say, and Tesla was the same thing, we'll look at it in just a moment, X is positioned well if the broader market can find a bottom. And then the broader market finds a bottom, and names that are already a bit off of their low are positioned better and usually get more bounce follow through. So I'm viewing this on SMH as all the same bounce. We do still need to confirm a daily uptrend whenever we top out, but NVDA was a lead bull the prior 3-4 days to end the week. And again, there was a setup where on Thursday we could say NVDA is positioned so that even if the NASDAQ hits a lower low, it's possible we hold support and remain stronger. And this is something I do all the time day trading. I'll recognize relative strength and weakness day trading based on, what an individual name is doing compared to the NASDAQ. NASDAQ hits a new low of the day. The individual name doesn't. That instantly shows me relative strength. Tesla did that a number of times this week. So NVDA bulls are pleased with the fact that we've got a good bit of space for a daily higher low to be the result of next consolidation. And patient bulls that didn't want to enter into weakness are going to be looking to buy a daily higher low next period of consolidation. So Tesla trying to put in a temporary bottom here, weekly, again, bullish reversal candle. The daily RSI got crushed. So this was a super stack going off. Again, the super stack indicator that we put together is when you have extremes, whenever it's firing on a signal, a time frame, I should say. So it fired on the daily. And that means your daily, 12-hour, 4-hour, hourly, 30-minute, 15-minute, 5-minute are all at extremes at the same time. And again, the last times this has gone off, it marked a long-term bottom and a long-term top when it was overbought. And so bulls are hoping, it fired on Monday. And so bulls are hoping that this indicates a longer-term bottom, and ideally, it indicates a monthly higher low. And we have a lot of proving to do from these bulls. But I'm watching the 4-hour here as well. And the bulls need to get over 253.55 to confirm a 4-hour uptrend. The 4-hour has been a nice guide for me. I don't often use it for stocks, but sometimes it's just where I find the clarity. And you have things like PLTR. PLTR had a 4-hour inverse head and shoulders that confirmed, leading to a very strong Friday. So I just find some clarity there. And Tesla still has that break of 253.55, which has to happen. And again, same thing as the NASDAQ. If Sunday night, Monday rolls around and we fail that resistance, we're just going to be in a tightening 4-hour range. If the bulls follow through, we'll break that resistance. The bounce will be more meaningfully underway, and we'll then eventually zoom out for a weekly lower high. But that will essentially be the weekly bounce underway. And so Tesla, I've been trading Tesla pretty much every single day in both directions. And I've just been loving the volatility. And again, the opportunity in both directions. Even, Friday, it's often that both directions eat, meaning you have, a 4% drop for the bears into a 4.5% bounce for the bulls, meaning there's opportunity in both directions daily. And as long as that volatility remains, that's, one of my standard day trade focuses, just getting comfortable with the name. And we'll see if this bounce follows through. Again, same thing. Didn't get close to a fresh low. We got so extreme, we didn't get close to a fresh low when the NASDAQ did. So we could say positioned well if the NASDAQ puts in a bottom, which it has at the moment. Still need that big hurdle to clear in the NASDAQ for confidence and follow through. But you can feel the fear alleviating a little bit to end this past week. And we'll see if that remains the case. FOMC on Wednesday, definitely going to have some significant implications as well. Financial sector is at a key support zone. So here's the weekly chart. Let's zoom in. So this level comes from, and we broke this short-term resistance, but look at this support. So we bounced off of 47.39 and then 47.04, and we built this base here all week pretty much, 47.28, 22, 28, and then that bull move Friday. We could say Friday is the most convincing bullish day that the financial sector has had since all-time highs. And so again, that's a sigh of relief for the bulls. A daily lower high is still the most likely result of this bounce. We still have to confirm a daily uptrend, but it's at least temporary relief. And that's obviously now a very important short-term support level. And the way that bulls position themselves, they, just using this as an example, they say, okay, that's now the level I'm playing off of. And oftentimes we know in the markets, we find a fear bottom, and then once we get a meaningful bounce going, we don't revisit those lows. And if we're going to stay in a strong uptrend, then we see continuation from that point. And so bulls have been trained to essentially wait for a level to be established and then say, okay, that's either the low or I'm wrong. And if we break these lows from here that we've now set, every time that happens, it's a bigger picture win for the bear in terms of maybe this is like 2022. Maybe this is, a more meaningful bear market. Obviously, the bulls are hoping that, it's just a fear. There's two scenarios as to what this is. It's either August, where we get a month of flush, double-digit percentage drop into the V-shaped significant recovery and continuation. So we're either going to do that, Or this is the start of 2022. And we had the sideways range. We broke it bull with zero follow through. There's your month bear drop. And then we confirm the weekly downtrend. So are we going to confirm a weekly downtrend? And I'm also watching the monthly EMA 12. So monthly EMA 12 in the NASDAQ has held every single period of consolidation the last 2 years. And we've got another few weeks to go here in March, and it's a battle for that level. We'll see where we close relative to it. We're currently about 2.5%, 3% under that level right now. But again, I'm going to use that to say this is the same as the periods of consolidation on the way up over the last 2 years, or this is different. We've lost it for the first time. So the rest of this month is pretty darn important. But again, you can shift the probabilities, which are the most likely scenario. The SPY monthly chart, there's no red flags on this monthly chart right now. You show me this chart and say, are we putting in a longer term top? I say, we don't have anywhere near enough information to make that kind of prediction with the information that we have right now. And so again, it's the fork in the road. One of two things are going to happen. We're either going to confirm that weekly downtrend, and it's going to be very similar to 2022, or we're not, and it's going to be a V-shaped recovery over the next 3 weeks. And again, we just every day is just going to shift the probabilities of which of those two scenarios is most likely. And you definitely need a game plan for both of those scenarios. And then again, every day we will shift which is most likely of those two. Healthcare. So healthcare is testing weekly support. Again, bigger picture, is this a monthly lower high forming? Sure, it looks like it. And actually, technically, it is by 40 cents. That's now been set. Are we about to roll over a monthly head and shoulders into yearly consolidation to possibility? I'd like to see a weekly head and shoulders. So if we bounce from here, I'll be keeping an eye out for a top fish where I'll be looking for a weekly lower high. I would be invalidated if 150.32 were to break. And then if we roll over, it's the possibility of annual consolidation, which is something I'm watching for after last year was the most bearish annual candle in the healthcare sector in over a decade. So bull's still hanging on, but keeping an eye out for a spot here. You can go to the daily or 2-day. Let's condense it to the 2-day. So I'll be keeping an eye out for the possibility that we form a right shoulder. So again, if we're going to set up a scenario where we confirm a weekly downtrend in the broader market, and it looks like 2022, it would likely be, part of that would be healthcare rolling over and convincingly setting that monthly lower high and heading back down towards those lows. Quantum names, extremely impressive end of the week. QBTS is now the sector leader. We were watching this weekly equilibrium as the most likely scenario months ago, and we got it, and we got a very convincing bull break. Earnings, some headlines. Look at the volume. The amount of volume put up Friday on a huge gap up and run candle. That volume is billions. So $2.5 billion traded, and all-time highs are back in the picture. We're just looking at 1058 and then all-time high 1141. And so again, it was, obviously the broader market bounce helped on Friday, but quantum with an extremely strong move. RGTI was a top watch for me on Friday. And the reason was it was a laggard looking to set its weekly higher low, which it has now done. And we're going to look for a lower high compared to 1620 and to continue tightening. But a really nice 4-hour bull break. And again, just a lot of opportunity. Great trading opportunity. We had a 15-minute later morning trade strategy. Again, go to the website, look that up. But that's when you look for the 15-minute higher low off EMA 12 after the bulls have convincingly proven their morning. And we got that. So, oh man, I missed it. Well, if you look at the later morning trade strategy on really strong names, oftentimes they give you a second opportunity. And here was another 15% of opportunity with a good risk reward setup, scouting that 15-minute higher low. Later morning trade strategy. So now what? Well, back burners are going to be on watch for this sector. We're going to look for 5-minute oversold to try and mark an hourly higher low. Definitely extended. You don't want to be chasing at this point. You want to be watching for hourly consolidation. But after Friday, that definitely tells me there's going to be significant volatility in quantum names this coming week in both directions. So again, I just know there's going to be day trading opportunity there. And I know that if I'm looking at pretty much QBTS RGTI and Tesla, I'm going to have all the trading opportunity I need on intraday basis. As far as the other names in the sector, IONQ still has work to do. I mean, it's obviously benefiting, but we got to confirm the daily uptrend. Then we zoom out and scout a weekly lower high. There's a lot of space for it. QUBT, some of these other names, again, still, very much so in bear control longer term. This is just a little mini short squeeze. I won't even call it a short squeeze, but clearly, bears got complacent and it's a quick turnaround from that. So on to the dollar. So dollar still weak in the short term, trying to get a daily bounce going, but it's a potential bear flag. Again, bigger picture, I'm just watching the monthly chart here for a monthly higher low eventually, but also essentially just don't care a lot about the dollar, keeping an eye on it to see if anything glaring stands out, but it's the metals that I care more about. Metal bulls want a weak dollar. Gold, weekly bull flag confirmed. New all-time highs, $3,000, and just really strong still. So we have a new daily higher low guide. So we'll say anything above 2880 keeps the bulls in complete control. And we've got silver trying to act as a laggard. Silver's approaching its 4-year highs up at 34.87. Weekly bull flag confirmed here as well. And the miners had a great setup. I've been talking about the miners a lot over the last week plus. Top watch for March. And the reason was this weekly cup and handle. And again, make sure you're following us on Twitter. I was talking about this a good bit on Twitter right before things got accelerating to the upside on Thursday. But we have GDX breaking to 13-year highs. Weekly bull flag confirmed. My target is the upper 40s from here if we're really going to follow through. GDXJ is leading a bit because silver was a bit stronger this week. If silver's leading, it's junior miners. If gold is leading, it's senior miners. I have exposure in both, as well as silver, as well as gold. But we broke some key resistance levels. And so we'll see how long the bulls can maintain the daily uptrend in the metals and the miners. Lots of space for daily higher low to be the result of next consolidation. And nice and comfy. The entry was for the daily higher low. Then that was my stop level. And I'd like to see another leg up to take a little bit of profit and then just be in a risk-free position. But essentially, if we were to give all that back and get back to entry points, it would be a bit of a red flag. But miners are going to remain a top watch just because, again, 13-year highs with the commodity gold and all-time highs, definitely looking good. Oil trying to get a weekly bounce going. This is a base of support. Need to bounce from here. So testing it the last 2 weeks, weekly stair-step drop. Again, we're watching this 3-month equilibrium. Let's go to the 2-month time frame, actually. 2-month equilibrium. Can continue tightening up for another few months as long as we hold 61.58. Daily's getting nice and tight. And so, again, it looks a little bit like the futures 4-hour as far as the sideways range. Got to get over this resistance wall. So expecting oil volatility to pick up a little bit in the short term after tightening up over the last week. Energy sector has been a bit all over the place. Nice recovery. I did get stopped out of my swing runner position on this bear break, but so far it's a bear break, no follow through. Lack of clarity for me. Though we did regain the daily uptrend, and we could say energy is positioned well for an oil bounce. But I have no plans on doing anything in energy in the short term. I definitely, this drop in the market has been led to some repositioning. I'm all out of my Microsoft position that I've been in for 2 years. My runner got stopped out there. And so it essentially is freeing up cash. Some of that cash has been going to the miners and the metals. But essentially a little bit of a reset. And then, where do we go from here? And patiently watching. I don't mind sitting in some cash for a while, earning 4 whatever %. And eventually I'll start reloading some hedge positions, anticipating a weekly lower high, but not yet. Natural gas. So had a target of $5. Natural gas got real close. And the candle on Sunday night into Monday was definitely a red flag for me. It looked like a climax top candle. You don't go 10% and then give it back in an uptrend without it being a red flag. And so that for me was a sign to be taking profit. I'm now out half of my natural gas swing position. Sold a quarter at a 75% gain. Excuse me. Sold another quarter at maybe a 68% gain. I'm not sure about the second position, but at this point down to a half. And I'm watching a 2-day head and shoulders potentially shaping up. And I'm just cautious for monthly consolidation, considering we just went up 100% with no monthly consolidation. So I will be in a continued trim mindset in natural gas after a really nice multiple month swing trade. And then maybe I'll be interested in a monthly high or low. But for now, essentially target achieved. And that's that. All right. Appreciate you watching. Make sure and do good things. Again, our website. I mean, you could spend 50 hours on our website pretty easily in terms of going through free content. So I highly suggest doing so. We're going to end it here with a couple clips from Puerto Rico, the one day that I enjoyed before I got a fever. And we'll see you all soon. Establish those game plans. What are you going to do if we confirm weekly downtrends and it starts to look more and more like 2022? What are you going to do if we V-shape bounce, set a monthly high or low, and head back towards all-time highs in April?